Hello, this is Alex with the Matrix program. Thanks everyone for viewing the information. Again, I'm a retired commodity broker. This is my old office, and I appreciate everyone visiting. Give me a thumbs up, it helps the algorithms, and we'll see you on the flip side.
Okay, this part is a little informational, kind of a deep dive into SLV for my own benefit as well as others that might not be real familiar with it. Obviously, it had a monster move up in here, kind of taking out the previous high back in 2017 by a little bit. But this is the problem child, right? These long drawn out bottoms. So first, though, kind of going back, the symbol SLV, I believe it was created in 2006. It's the most traded silver implement thing out there by far. It's a grant trust, not a stock, not a mutual fund, not an ETF in a traditional sense. Every share represents 0.92 ounce of physical silver sitting in J.P. Morgan Chase's vault in London and New York. Wink, wink. The BlackRock sponsor through their iShares subsidiary of the Bank of New York Magellan. Again, that stock has been going through the roof. FYI, nice trender on the BNY. JP Morgan is the custodian. Of course, they get a fee for that. There is about a 0.5% annual sponsor fee deducted daily, not weekly, not annually. That's daily in silver, meaning every day you hold SLV, you own fractionally less silver. It's understanding why it's important to know that, right? Now, if it goes up 10 times, you miss a little bit, no big whoop. But if you're in there for 10 years and holding a position, you're losing money on the fees. A current atom, roughly about 28 billion. That's about 0.5 generates approximately 140 million per year going straight to BlackRock for doing essentially nothing. So that's how it's set up. You know the rules of the game. You don't blame them. If you could trade cash silver if you want, or go to the futures and do that. So this is the implement of choice for most. So as long as you understand the ground rules, right? Yeah, actually you're paying about 5 separate layers of fees to institutions who take no directional risk in silver whatsoever. They're basically the bookie in all regards. It's kind of interesting to know who actually owns SLV. They're not bulls, by the way. They're market makers, arbitrars. They create and redeem shares for a living. So they're traders, big commercial traders. Participants of Goldman Sachs, of course, J.P. Morgan, which we know, Morgan Stanley, Bank of America, UBS, Citigroup, and Barclays. Sounds like a chorus of great human beings. Okay, we got the holder of over 4.27 billion in SLV put options, and this is as of, I believe, August 17th, 2026. And the dominant short position in the COMEX silver futures holds 61% of the precious metals derivatives among the top 4 U.S. reporting banks. So J.P. Morgan is the short. Now, doesn't mean that they're naked, right? They might be long the silver, but they're hedging, I'm assuming. And part manipulation, maybe. Don't know that, right? They hold silver. Let me see. Yeah, I mean, they're long with puts, basically, what my notes kind of read. Now, Jane Street, which is an anomaly out here, fourth quarter of 2025, quantitative, man, I love that word, quantitative trading firm Jane Street built a 1.3 billion SLV position, increasing their holdings by roughly 500 times in a single quarter from 41,000 shares to 20.7 million shares. This has made them the largest reported holder of SLV, surpassing even BlackRock, who sponsors the fund. Do you think they have coffee or beer together? During the same period, Morgan Stanley reduced its position by 3.7 million shares. Silver peaked at 121.58 on January 29th and then fell 46% and more, I think. Bank of America reportedly holds 1 billion ounce short position in silver in the over-counter, exceeding the entire year of global silver mine production. So they have more short than there is mined, which I find pretty fascinating. Now, it's not uncommon in the commodity world. Let me see. The most technically significant data point in the market right now, weak hands have been completely flushed, and their short side is at a 15-year low in open interest. So that's kind of interesting. That's on the COMEX futures. Of course, yeah, because the margins went from 10 grand to 60 grand. I mean, it makes sense. I don't know if that's a big surprise or not. Again, I generated a lot of this from AI, so you got to take a little bit with a grain of salt, do your own homework, obviously. It's their share price. JP Morgan's at 363, Morgan Stanley's at 210, Goldman Sachs at 1,021, Bank of America at 64.60, and UBS is at $33. The sentiment as of a week ago is a buy on JP Morgan, which again made new highs recently, and then a moderate buy on Morgan Stanley, a hold in Sachs, Bank of America is a buy, UBS is neutral. The bull side, then the next squeeze will be bigger than the last one because the physical market is structurally tighter than at any point in the modern silver market. Now I'm going to push back on that because it's all bullshit. If you believe the silver pundits out there, they're always talking this stuff. All it takes is something to change, right? Change something in solar panels, and all of a sudden you have a massive surplus, right? Again, silver is one component of a lot of the battery that are being built. So again, the smelters were behind almost 3 months at the peak for a reason, which put the top in, right? They were, back in the 1st of January, they're already 2 months behind, and then 3, and then at the high, we finally curved out. Well, that just told you all that supply is coming into the market eventually, and they're still working on that. So, and I'm kind of a bear because I know the potential is more down. I think the least path resistance. Again, we're kind of in the hope stage, right? So we've had the greed in the hope, and I don't know if we've reached the fear stage yet or not. Probably we might have, but maybe that low is good enough that we just had. Okay, on the bear case, in one sentence, the $50.36 technical level, the old 1980 COMEX high, must hold as support for 2011 pattern repeats. 72% crash, 4-year recovery. So now again, I believe in the past replicates, but never exact, hardly ever. So my pushback is the chart will tell you the direction, draw lines from high to high, low to low, maybe midpoint to midpoint. What I do is solar eclipse close. I draw a trend line and keep the parallels, knowing where everything's at, because the market tells you the direction. So now if it matches up with 2011, cool, right? That gives you super confidence in. Okay, we have silver futures bull target. This is the bullish thermometer, the green. $100 from Comer's Bank, 90 Bank of America case. So about a 60% bullish consensus. SLV ETF target is $95, a 60% bullish sentiment. Bank stocks target JP Morgan 420, Sachs 1150, Bank of America 75, UBS $62, about a 76% bullish sentiment there. Okay, in the closing, the institutions that hold the SLV short silver on COMEX Vault, the physical metal, and collect fees on every transactions are clearly near their all-time highs in their own stock price. So they made a killing on this pumped up news caused by China, right? I mean, the Chinese tried to corner the market, and these big institutions facilitated because they knew they could make a crap ton of money. That's why they own a lot of SLV, and they get fees on top of it. The commodity they're involved in is at 46% off its peak. The toll booth operators do not ride the roller coaster. They collect ticket money from everyone who does. Okay, retail investors, SLV is the most acceptable and liquid way to get silver exposure without storing metal. The fundamental supply deficiency story is real. The industrial demand floor is real, but the paper market is 100 to 200 times the size of the physical market. And the largest short holders are on the largest put option holders and the custodials of the vault. So the people who run the vault have puts on. Know your time frame, know your risk, know who's the other side of the trade. In silver, the other side is JP Morgan, the same firm that holds your silver in the vault, shorts it on COMEX and holds 4.27 billion in puts in the ETF that you just bought. Now the problem with that comment from the enlightened ones, known as AI, is you don't know what their true position is, right? They may be long Hang Seng on another division, or their third cousin twice removed has $1 billion long on the Hang Seng. I mean, you just don't know. So again, you don't know what they're doing for sure, but they do control a pretty. And you look at the stock price. If JP Morgan was in trouble because of silver, it would have never gone up. It made new all-time highs every day, which makes sense, right? Because a lot of people kept pushing out that news. Oh, JP Morgan short silver, JP Morgan short silver, and it dropped because of that pressure. Anytime a market is forced into dropping because of news, economy, because of government influence, whatever, that's a buy, because again, they'll push out, eventually clear out highs and keep going, right? Because again, all those people that pushed it down have to get out. And here was the bear here. Let me get over here so I can draw a line. This is the the September 21, Labor Day basically. So again, this blip up might be a powerhouse, might be a breakout. That's up to you to believe. But we know that this is a problem child. Let me see. Let's go back to this one. Yeah, see, that one's already in the cards. But the problem is you can take, I don't know how many different lows you got here, right? You can go all the way out to that one. But let's just go out to this one where it made a lower low. Probably snapped a lot of bulls out. Yeah, I mean, you can see it's still got a ways to go. 65% is, or 65% is my target. 66, right? Mathematics, 2/3. My favorite probably is 70 to 75%. This is 85, which happens quite a bit. But the time, I'm not so concerned about price. I'll be looking at March 29th, 2027. Now that makes sense a little bit. See this one right here that I'm looking at? Let me get it wide. I don't want percentages because that's a screw with your head. There's 10. Wow, 10 days, really? Holy crap buckets. Am I looking at a daily? Yeah, wow. 10 days, that's a mover. And actually, 5 days to that secondary event. 6, we'll call it. Wow. Oh, God, dang it. Let me drag it over to get an idea. The potential, right? That's all we want to know. Where this sucker could go, so you can, if you've been short and wrong a long time and you need a graceful exit, you're looking at August 26th at 150-ish on the SLV. Nice target. I think it probably go a little higher than that personally. Probably pop these stops out, maybe even up here. But let's say you have 1,000 shares, you want to get out 100 on these pops, lighten the load. Now again, you can see the color generation. Shorts got out. Shorts got out. Green buyers. So it looks a little different than these other two. Here was some green back here, which was a high. So again, be a little cautious. But again, it makes sense to lighten the load on the way up. Now again, that's me as a trader. I'm not thinking anything like a long-term event here. I'm just thinking a pop. I don't think it's going to turn into this yet. Now I could be wrong. And if you want to study that case to the fastest move in history, or one of them, it's riding the speed. And the target would be 340. Again, out of the money option play. The zone, September 17th. You can look at the options and see where you're at.
Hello traders, this is Alex with the Matrix program. We're going to do a deep dive on SLV. I've never traded it. I was a silver guy. I'm a futures ex-broker. And I've never traded SLV. I always traded the futures. Of course, margins weren't 60 grand. But anyway, SLV is a good way. It's a big implement. I learned a lot doing this dive. I did a kind of AI informational part, which will be part 1. And then there will be a part 2, which is over the Master Chart Square 9 calculator. Again, a deep dive into all the swings since the creation and the birth of the contract. Typical thing what I do, right, when I go through a market that I haven't traded before. And then I'll do the chart process on what I call the Master Chart, right? It's just using the moons for time and the square 9 for price. And we'll review that as well in a section. So there's kind of like 3 parts to it. Now, there'll be a comprehensive one as well. But I thought I'd give you an informational part if you catch one of these in between so you kind of understand. Anyway, enjoy. Hope you're successful in your trading.
Okay, in this segment, we are going to look at the SLV Matrix Chart. I just added that to my list, my favorites list. There's probably 22 in there right now. Again, the moons for time, the square 9 for price. Again, we're using the waxing, waning crescent moon. I started plotting it back from September of that eclipse, Labor Day, basically, right, of 2025. This was the low. This was the previous solar eclipse. This is the 1-to-1 trend line. 1 box over, 1 box up. Pretty simple stuff, GANN stuff. And you can see it hit this pretty good right in here. And then it bolted, right? Once it gapped and started going. Of course, that was the big silver pour out. Eclipse itself was a low. The quarter was also the low. This was kind of a no man's land, but kind of on the, where to put stops kind of deal, right? For me. And same way with this one. This was kind of no man's land, but again, this is where I probably would have had stops initially until it really tore ass and craziness pricing. So hopefully everyone has a extreme rule, right? I do. If it's 10 days, 11 days straight up, higher highs, higher lows, higher closes, I begin to lighten the load or use puts if I can. Okay, here's the previous solar eclipse. Kind of a low, kind of a pivot, missed it by probably a day or so. The quarter then was the low off that one-to-one trend line, off that low, and it hit it again. This was the half, yellows are halfway. These green, gray ones are quarter, three-quarter, in between the two solar eclipses, not the lunar, but the solars. Anyway, that was definitely a big ranging day or period, and seesawed the market back down. And this is current. This is the 3/4. This is the solar. We're coming into the lunar. Again, the full moon sequence on August 27th. Solar eclipse is right up here. Now, one thing, these lines are coming off the highs. This one was the all-time high, right here. It's so fast that maybe I needed to go slower, but I hate going too slow because then I have to redo it when it slows down. But this is the cardinal cross, first one. A good area if you did pick bottom and you're not super bullish, might be an area worthy of getting out. Or if you bought 500 shares, get out of 100 shares up here on the other day's close. I think we're a little higher currently today. So today is August 20th, 2026. So today's close will definitely, again, it's the time zone. You probably can't see it on your screen, but it's August 20th at 3:33 in the morning. So do you move it on to the next day? I don't do that. I just move it. I consider that part of the day. So, oops, I don't know why it made it wider. So anyway, pretty good area. Now again, the other one's up here, and that kind of makes sense too, right? That's up against this downtrend line off the all-time highs, or one of the main high, second high, right on the lunar eclipse. So this would be a great target. Let's say somewhere right in here. Let's say 64.20-ish, round down a smidge. Again, don't try to be too precise, but have a working order in if you're willing to sell it. Now, if you're a bear, right, you sell a little bit here, maybe a little bit there. I hate doing that. I like to find the spot. Now, maybe turn on 2-hour chart and go short, right? Now, these squaring out of the ranges, you want to keep track of these for the future. Right at the end of the year is the one that this high right here on May 16th zone. That squares out from the low. Now, again, assuming the low holds. Now, this brown line, this is based off the solar eclipse closes. And again, you draw that from close to close, or you could use like January 1 to July 1. I mean, it's kind of the same principle. It's dividing the year in half. The market tends to show you direction. Anyway, the projection on the next solar eclipse is right here. Let's call it 52.20-ish, right? Either one or 52, let's go 53 to 52. That'll be the objective if this holds true. Now, the other squaring of the range from the all-time high is right in here. So again, you can see we're hovering around this solar eclipse, next solar eclipse sequence. So now that could be a high. I don't have any clue. I used to try to be precise on picking stuff. Now I do not. I missed so much stuff when I did that because you're assuming, right? Oh, I got to be right. I made the forecast. Well, yeah. I mean, I called thousands of highs and lows to the exact penny, but you still can't make money on that. I make more money now not trying to be a picker of preciseness. And I wouldn't say I still pick, but in a vicinity. Be more general. I don't miss hardly anything now. Again, I've been preaching this solar eclipse sequence on cryptos, the metals, and some other stuff. And here we are right in here, right? This kind of gave you the broad spectrum of where it's at. Now I'm going to go to the daily chart, and we're going to review that as part of this package. Okay, hello traders. This is another part of the series. We're going to look at what I call TNP, time and price, that GANN used to project on his 50% levels. Kind of cryptic, right, which he normally is in his writings. So I'm just going to give you a quick little summary. First, again, this is the SLV chart, right? Highs, lows, current little bottom, our recent. Today is August 23rd on a Sunday, 2026. So it's been a nice little recovery off the lows. Of course, I've been working on this SLV project from around in here, of course. First thing we want to do is just draw a simple trend line. Let's get rid of the stuff we don't need. Bar count, don't need that. Okay, so we are going to project down to 50 percentile Just a simple thing. Now, again, this was our first pointer. And again, going down, this one right here. Let me mark a pointer. That one right there. Let me see if I can spread it out. Right there that we're on. See, so again, the market tells you where you're going. It points to the direction. Of course, everything has a change of speed. So here's 50 percentile. And obviously we've taken that square of that range, right? We're looking at squares of the range. Obviously it took it out in time, not in price. So in theory, you go on to the next square, right? And so on until it's taken out. And you just keep going out into the future. Let me just draw these in. I normally don't do it this way, but it kind of gives you the idea what we're doing, right? Until the square is taken out, and we hit the bottom of that 50 percentile retracement down in here. So now let's get rid of these because that ain't what I really want to show you. But that's kind of the concept, right? When I do these trend lines. So, and now we're gonna let's get rid of that one too. Okay, that was our first pointer, and then we move to the next pointer once it goes out of square, and this one went out of square in time. And it went out a square in time there. So you go on to the next pointer, which was this one up here. And you go down 50%. Right, so if you'd had orders in, right, let's say you picked it up here, or you sold it up here in the secondary event on this bear trap area, the 50% you'd have been filled, more than likely. So that, because it hit that price and just went beyond by a little bit. This was around 55.06. Anyway, it was right in the hunt. So the square was complete, and this squaring of time, let me get it more exact here. I'd never try to be too exact, except for when it comes to the math part of it. And so it missed the timing, right, is what this was our pointers. It matched these two up, actually 4 highs, 1, 2, 3, 4, and then we squared it out here, missed this high by a little bit on the time, right, because this is projecting time and price. The time was a high, the price was ahead of time. Makes sense, right? Which happens. Sometimes time is ahead of price. Everything mathematically can be turned identically, right? So, all right, so that now we've confirmed that, and you could keep going, obviously. We know that the tendency is we break at least 65 to 85% post-bull. So we're going down now. We're out of price and time. And so I'm going to go to this high because it's obvious, right, that this is the time we need to look at least start looking at it to get the time in the correct window. And we're going to go down to 66%. 66%. That's 2/3, right? Now you could use a Fibonacci number. That's fine too, as long as you keep it the same. 65 is kind of my number, so we're going to stop there. And we'll just assume some things. So again, the pointer is this one. This is the target area. So now that is down and dirty. That's just under 40 bucks. Logically kind of makes a little sense. We did a lot of business at $40. Did not so much business up here because this was too fast. Margins were too high. So you look at this date, write this date down, October 9th. Give or take 3 days on either side of it, right? Because again, we're dealing with something that's not perfect. So that could be a high, could be a low, could be a drainer. Now you want to go draw your square in. Once you have, again, this is current, right? As of my time. And you kind of look. We missed this high on this. This is 1/8, 1/4, 1/2, 3/4, 7/8, which I don't use too much. But this is the 1/8 missed it by 1 day. This picked this pretty. Oh, that was the high, duh. This one was no man's land. This one was the gap down in acceleration. This one was kind of breaking above the trend line. So all those kind of gel pretty good. And now we're going to duplicate this trend line and take a look at how it did. Right, I'm just lining it up like with this high. It missed that one by a little bit. Kind of missed this one. Kind of hit this one. So not terrible. And you go to the lows and see how it did. We hit this high, hit this, or excuse me, low, hit this low in this gap. So it really looks pretty good. Let's delete this one now. Let's look at a different speed. Let's go to a 2x1. Just kind of gander. Nothing, no parallel. Off the high, nothing. Kind of, maybe. Now let's go. Let's slow it down. 2x1 speed. Well, we're on that one. And there's secondary event. Kind of hit that one. Kind of missed that one. Kind of hit this parallel. So far it looks pretty good. So that, again, I'm proving accuracy, right? That's what I'm trying to do, is prove accuracy. All right, now we can also go up. And again, this is your cardinal cross, your one-to-one mix. Nope. Yeah, kind of parallel, kind of parallel. And that one hit right on. So this parallel is working on both sides of this range, right? And I guess we can leave it in. We'll draw another one in, so you kind of, that's your parallel based off of the 1x2, or excuse me, the 1x1 speed, right? So we like that zone. Now let's do some possibility work on the bull side. Let me get rid of all this crap. Hang on. Okay, I got it cleared out. Now, again, it's a nice thing about, even though I was trying to get this thing out because it looked like a bottom to me and everything was, the solar eclipse that I traded was in the zone right here. So I kind of wanted to get a video out on, again, for my own personal benefit, but as well as others that might not trade it, is the SLV, right? So nice thing about, though, being a little late to the party is now we got a true construction. The market is pointing you in a direction. And to prove that, of course, you can go from low to high and see how it's running. Oops. Pretty damn accurate. Now you could take the high, dang it, the high bar to the low bar. Again, kind of an average, which again is what you do. Sure looks pretty accurate to me, and we know that this speed is also part of the other one going down, right? So we're pretty comfortable with that. We're kind of replicating this pattern, right? So now what I'm going to do, if I can get it to cooperate, we're going to draw this speed line, which is 46%, by the way. And then obviously we're getting close to the 50 mark. So interestingly enough, that's what we kind of want to do. We're going to go to, let me just do another line and change the color so we can get a drift here. So that's the one that we're kind of basing it off of. So we know that, obviously it went out of the 25%, which is usually what I don't start with, but we got to start somewhere. So we're going to go to this as our pivot or a dot at the barrel of our gun, the pointer, right? This low right here, and then go up to 50%. Now, obviously, when you're looking at it not so into the current, right, and you're in the past, you'll probably go up 100%. Usually I go 50% down, 100% up. So, and you can do that even now, right, and get the dates. November 11th is our date where we have time and price met. The TNP, GANN says 50% is your most important level, not retracement, but as a time and price calculation. This is the speed line. Now, if we want to double check that, you drag it around and it hit this low, hit this high. We're on it currently, maybe through it. Then go back here. It kind of hit it, not quite. Let me go up to the next one. Paralleled this one pretty good, missed it by a few ticks. And you can see what I do, right? I'm using the trend lines as confirmation that this is some type of accurate. Now, of course, again, we're squaring of the range. If you want to draw your square of the range in, you can. Here's your eighth quarter, which kind of was in between stuff. And the 50 percentile is your next resistance or time zone, September 15th. So you can write that one down. 3/4 is October 14th. 7/8, which I don't use much, is October 28th. Okay, we know all that now. You can write that down. Now one thing we have to understand is the all-time high, right? Makes sense. Only logical. This is January 29th, right? So, dang it, hang on. Delete. I gotta get it down so I can go out a year. All right, here's January 29th. Here's January 29th. That's an annual, right? What GANN called an annual. This is a 1-year anniversary date, right? From this high to this zone. Now you want to double check that. Again, now we're kind of looking on the positive side, not just negative. Again, it's all about possibilities, right? And knowing what you don't know in preparation. Okay, so now we've got this trend line. You kind of double check everything. Kind of similar to the other one in speed, so we know that one's fairly accurate. Now also you can go down, and there's your 2x1. There's your 1x1. This is your cardinal cross. This is your time frame, and this time frame was the right shoulder low. So I like all that. It's positive for sure. Now the resistance is this 3/4, and that's kind of the resistance. And I would assume it probably take out this high by a little bit. This is 64.69. Yep. So I would assume it'd pop that out a little bit, run a few stops, maybe by Monday. Again, today's Sunday. It might be tomorrow that we pop the stops. And then if it has a bad close, I'll be a little concerned. But if we can hold gains, that'll be pretty friendly. So that is your projection based on uh, what we know right now. This is squaring out a negative range, so the projections are all pointing lower. Right. This is halfway. You kind of look for spots along the way to sell this thing if the trend is truly down. Okay, here's your silver chart, which is the main emphasis of everything. Again, we'll kind of do the same scenario. I might go blow through it a little quicker, trying to keep this video short. Trying to keep it short. Went down about the same percentage. This is the pointer. You got to go down 65%. Okay, that's the pointer at the barrel of the gun. This is the target price. So if you're wanting to buy a dip, right, this is where it'd be, 42 bucks. That's 65 percentile. Now again, it usually breaks between 65 and 85 to complete the bear mission. Again, you got to reload the gun, get everybody thinking it'll never go up, right? Well, it's pretty too easy about it in my opinion, but we'll see. But so that's your pointer, kind of a similar deal. You can replicate this across the board, and you can kind of hit that high, hit the main low. That's pretty cool. This one was kind of hit this high, hit this low, kind of a parallel. And it looks like it kind of paralleled on the way down. So that looks pretty accurate, similar to the SLV. Now we'll just assume that's it for that one. Now let's do the up mentality. We'll go this one to this one. That's 46%. And we're going to replicate that right there. Now that's an exact target. That would be September 7th, probably Labor Day, I believe. So that'll be interesting on its own merits. But now let's drop her down to 50%. There's 50%. Kind of on the barrel of the gun. Here's your pointer. Kind of off a little, but close enough. November 13th is that time zone, and this is the pointer that we're using. Right, so again, you can see that now. Again, if you go out to 100%, which is normally what I would do, you can see where it stretches it to. Trying to get you the time zone in here, so you have it in your books. Looks like about March 15th-ish, 12th-ish of 2027. So that is the target. This is the target to the downside. This is the longer-term target to the upside. Now, of course, you want to prove that out. You start drawing around and see if there's anything that matches up. I do not see a whole lot there. A little bit one there. Missed that one. I did hit this high up here, that one and that one. So kind of, sort of, but not as powerful as the other one. And of course, if this target is reached, that'll be your channel that it could retrace up on, right? Now, again, this is all possibilities. We have no clue. You don't take any of this with a grain of salt. But if you're an option guy like myself, you know what options to buy. You can take all these that we just discussed and apply them as an option trade. At least you know what month to buy, right? So that's kind of all my theory wrapped up into one segment. Now you go back in time. Let's spread this out back to computer zone, and you can do the same work on silver. Here's your pointer. That makes sense. We'll go down 50%. Okay, there's your pointer. There's 50%. This is time and price, TNP, right here. So it worked real well in time, not so much in price. So that told us that be careful this back rally. And it was just a back rally. Good one, though, by golly. It wasn't small. And so then you kept going down, right? You go out to this pointer, more than likely, right here, right to where the cross is. And you go down to 65%. And we broke the square in time and price. So you go to the next pointer, which is this one right here, right? And you go down to 75%. There's close enough. Well, I'm off a little bit. Normally I'm not this precise because I don't ever trade that close, but you can see this is the target zone. So your square of time, and I'm going to go all the way out, since And I'm going to use the 50%. Basically one square. This is two squares, right? So time and price still missed it, but we finally hit the time, or excuse me, the price right here on 2020, which again loaded the gun, cleansed the system out, and was prepping then for the bull to come in 2021 too. So that's time and price, and again you can see that the square finally really even didn't get broken there, so you could keep running the square out into the future. But that's how this works, right? That's a time and price projection, and all these zones then are pretty critical. Not so much to pick and trade, but to know where to put stops and levels of support and resistance. I'm going to sign off. Thanks again, and if you enjoy this stuff, give me a thumbs up. I do appreciate it. Ciao.
Hello, this is Alex with the Matrix program. Thanks everyone for viewing the information. Again, I'm a retired commodity broker. This is my old office, and I appreciate everyone visiting. Give me a thumbs up. It helps the algorithms, and we'll see you on the flip side.
Okay, in this section, we're going to do the master chart calculator on SLV. Let me get it in frame here a little bit. This is the historical data from the SLV chart. Let me get it here so you kind of get the picture. Yeah, this is the data from the chart from the beginning. So it's a comprehensive view of it. There'll be a lot of dates associated. Let me clear that back out. So I'm going to plug these dates into the master chart squaring calculator. Again, the square 9, right? Excuse me. This is your price in the middle going around and around. These are the even squares. These are the odd squares. Again, no matter what you put in the center cell. And it can also do time, right? The date that we'll be plugging in. You can go around and around. Now, a lot of times back in the day, you had to calculate that manually, which really sucked, by the way, especially if you're dealing with a lot of history. Of course, this isn't too old. SLV started trading in 2006, right? So it's not terrible data. But you can see we got quite a list. I tried to pull all the major swings. Again, this is going to be a pretty long video and review because I'm doing it for myself because I never trade SLV. I always traded the futures, the silver futures. And then when I retired as a commodity broker, I switched and kind of more interested in the SLV when I sold my business. So again, because I don't want to trade, as a retired old guy, I don't want to have a whole lot of extra risk. So the stocks kind of keep me a little more level. Anyway, we're going to review these. I'm going to plug these in just like this. I made it. This is what I call the cheat sheet, right? I'm just going to copy and then paste them in here. And 1290 is in the center cell now. Let me go to the price. This is 1290 in the center. Goes around, around, around. Again, even squares on this angle, odd squares on this angle, and all the corresponding angles, 45s, 8s, and whatnot that are coming off that center cell. Anyway, I'm going to try to speed through this, so I'll probably do a few and then pause it. And you can see this is the data that we're doing. And it goes out quite a ways. So we'll kind of get there. Now, the parameters I'm going to put in are 2025, January, right? It should keep it this parameter. Now, you can switch it to 2024 or 2026, right? But try to keep it 6 years because the advanced sort has 6 years in it, right? And we're not going to probably do the doubler today, which is, again, another part of the program. Again, you put something in the center cell and it doubles, right? So if it's, well, let me just do 3. You do 3, it goes 3, 6, 9, all the way out, right? And the 3, 6, 9, and it doubles all the way out. It's great for cycle work, astrological work, that kind of thing. And cycle work in particular. Again, I'm a date trader. I'm an acceleration guy. I'm looking for places to use options if I can. And that's the nice thing about SLV. There's definitely options involved. So anyway, again, first thing you do is reset this, right? Put in the data. There it is. Now, if it doesn't, again, I usually try to go from the oldest to the newest and that kind of thing. So now, once we have it, you plug it in. Pretty freaking simple. You go to the next one. And it's just a simple spreadsheet, but it's sure handy. I use it a lot. And I'm going to go through here and plug all these in. You can see it saves it here. It also saves it a few other places. As a computer guy, I've lost a lot of data in my lifetime for not saving it. Or, fell asleep at the keyboard. Anyway, I'm going to go finish this up and I'll be back with you. Okay, again, I listed all those. Now, what I do, I don't take all the subsquares. I take them from like here. I don't know exactly where. Maybe even this one, 5.5. Again, that's revolutions, right? Anyway, So a lot of these last few dates only have a few data points because they're not, these don't make sense, right? When you look at uh, time, here, there's the last one I inputted. Well, you go around and around, and these angles are too fast. They're squares, right? This is the even squares, and this is the odd squares, right? All the way down, just like you would if you had 1 or 0 in the center cell, right? It's the same principle. So anyway, I don't take all of them. So the last data is more for an annual, which we'll kind of review in another section here. Okay, so we're not doing the input 2, so we got all the data input. Now let's do the run advanced sort. Now this is the button here. Now if you had the MC2 and you wanted to merge it with your MC1, where the square 9 data, you'd click it here and this would slide over. I'm not going to do any of those because again, we're going to have a crap ton of data. We'll see if my program can go out this far. It's been a while since I did one this big. Haven't tested it. Now again, 2025 makes sense because a lot of the dates, right, or 2025, end of 2025, there's quite a few swings obviously in 2026, all-time highs or whatever. So those aren't going to be registered here. Now what you do see is, get it down to the bottom, holy crap buckets. Again, 26 has a few less, right? It makes sense because we had data in 2026 all-time highs on that date as well, and probably 5 or 6 swings. So this will be your main gist here. 2027, 2028 won't have as many just because it's going to have less and less and less all the way down. Still quite a few. Let me double check. I want to make sure that we have all the way out to December. Yeah. Okay. Because I'm doing this for real for me, so I'm double checking everything because I want this data to be accurate best I can. You can see there's a lot less in 2029. Again, mainly because the data only copies this right here, right? So you have less and less as you go out into the future. Okay, so these are the dates. So I am now going to plot them on a chart the best I can. I am probably going to take accumulation dates only and any singles, or I'll mark any voids. Again, because voids are important, right? Again, I'm looking for accumulation, obviously. Like here we have 3 on the 2nd, 1 on the 3rd, and I took everything from Saturday, Sunday, and I usually put it on Friday. So that's kind of how I do it. And we'll put it on the chart somehow, way, shape, or form, and we'll take a look at it probably just through January of this year, 2026. So hang with me once again. Okay, I plotted the dates. I kind of took like 4 swings or 4 data points. So there wasn't too many voids. I marked a few. I might go back and look for a few, but I took ones that had an accumulation of at least 4 dates. So I plotted them on the chart, and we're going to go through them. There was a few voids, a few dates that weren't on there. Pretty interesting, actually. I've never done this before, so again, I'm doing this for my own this is how I prep to trade a market. So I go through this process pretty relentlessly. All right, so this is our first of the year. Our first zone was right in here. Now, obviously, since we know the future here, we can take off this, and I don't consider these arrows as trying to pick highs or lows. It's kind of like a pressure, following a weather line, a pressure line on weather. Greens are arrows that are up or pushing it higher, right? And the red ones will be pushing it potentially down. And it's all about the potential, looking at the potential, similar to understanding electricity, right? It's all about the pressure. Or a river flowing downstream, and there's calmer areas, but the water is still flowing, right? Because it's either wider or less steep. So anyway, this is kind of how I look at it. Now, again, as we go through here, these are obviously all-time moves, so every day is important. And there was quite a stretch where we didn't have 4. Now, there was obviously a lot with 2s and 3s. And this was the all-time high day. Now, we had a couple zones in there, but it didn't meet our criteria for. Again, I'm not trying to be real precise here, but I'm just trying to show you how I view it. Okay, so we came upon this event. Well, we know it had the all-time high, dropped damn near 50%, not quite. So a pretty heavy smash. So your antenna's on high alert that this is over, right? I mean, I don't care what you believe. I don't care what the internet is telling you. That's an over move, right? It dwarfed everything else. When this reversal happened and this follow through, now it sucked you had to wait down to probably somewhere in here to understand that, uh-oh, something's wrong. But you trade it accordingly, right? So here's our next zone that had at least 4 in a in the same zone. So we don't know. Now, of course, once it broke down here, I believe we can take this off. Now, your stops, with this massive a move, you probably have to trade a 5-minute chart, right? Because, again, there's percentage moves here. So, all right, here's our next zone. And at this point, we probably don't know yet. But, you get a couple closes above it, we can probably do some assumptions, right? Well, here is a close. And, of course, everybody's bullish because they've made a wad in here and probably took a bath here. But, they remember the good, never remember the bad. And, again, most people are long only. They buy only. So, well, obviously, if you did sell it, obviously the stops go here since we confirmed it with this and a lower low, right? Now, if you were long and for some reason you didn't get out, it's tough to bail there. If you didn't have a stop in, I'm sorry. Again, any method requires risk, but not that much risk. Put a stop in, damn it. Okay, so we're moving up. Again, we're looking for zones of 4. Well, you can see, and I also marked these gray double arrows. That is the annual, right? This all-time high I marked continuously, and I do on my charts. I have it on a Google map. Well, let me just, I'm getting off track here. Hang on. Well, I'm definitely off the rails. Let me here's my Google Maps, and I keep track of stock market, the 6-pack of cryptos I keep watch of, ex-dividend dates, that kind of thing, on the 20 select stocks that I trade, that the Matrix trades, and solar eclipse, lunar eclipse stuff. Anyway, you can see here in August, I keep track. These are all the gray ones are all annuals on the 20 select stocks that I trade, right? So I keep track of them all. You can see here Meta has some pretty big one that came in on the 14th. So anyway, I keep track of annuals pretty religiously, just so you know. No idea what that was. Okay, so we have an annual coming up. This is the big dog, right? All-time high. Can't beat that. So what are you going to do, right? If you pick her and you picked it down here, are you going to assume that it's going to gap and go? Now, most people were so bullish they couldn't see straight, right? They were talking $400 and weird shit like that because they want to believe it could be some massive move. And it could be, right? I'm not trying to downplay that, but I mean, this was the power play. What's it going to do? Be even more? I mean, a little realistic view. So anyway, and plus we had another zone in here with at least 4. So we had some pretty powerful deals to warn you, right? This was the annual. This was the next day. Now we can't take any of these arrows off yet until we kind of can see. All right, we now show the market broke. The potential high is pretty real, and I believe we can take these off. Again, and this fell on the weekend, right? This was the 29th, was the high, January 29th. So it could have been Friday or Monday, right? So actually we could slide it up here. I always do it on Friday. Okay. And we have a void. Well, we didn't have void, but we didn't have 4. The next zone at least had 4. Some of them had 5 or 6, right? 7. I think one had 8. But anyway, you had this break, and we did pop new lows. You can't really confirm anything yet. The pressure is starting to build. We don't know which direction yet until it follows through. Okay, now we know that it broke down into a zone, so we can comfortably take that off. Now you can feel the pressure ridge forming, right? And probably could draw a line over that. Now, again, we kind of went down by the close. We had a reversal, so I can't pull this off yet comfortably, right? Because I'm not comfortable confirming that this is a low or a high. Now we have a next zone, and it's inside. I'm still uncomfortable. We have another zone and an annual. So that's the 29th, right? So a potential, it has pressure building on both sides, but the weather line is right here, right? And the bad weather is in front of it, and the nice clear weather is behind it. Windy, crappy is, the terrible storm that's pushing right down. So, and there's another front trying to push it up. Which one will be stronger? Well, we did pop it higher, and with a zone coming up, so I am comfortable. I am actually gonna do. We're gonna leave that one for now. We're going to get rid of the. All right, so it's pushed higher. We have a zone coming up, and this one is quite unconfirmed yet. Now it did go lower, and now it's slightly higher. So still unknown. Now we can probably comfortably eliminate these. Uh-oh, where was that one? Oh, the 29th. That was on again, a weekend. Again, you can see that this had more strength. Of course, the public was phony. Okay, good. It's got to go up. It's got to go to 200. All right, so we poked a high here on the 14th, 17th of April. Now, another annual that I should have mentioned, obviously, is that April 7th, right? That goofy one that came in 2025. It occurred in cryptos, occurred in the metals, occurred in the stock market, commodities, that made a low April 7th. So that one's always on my mind, and I would have, in my knowing what I know, I would have definitely been watching this area potentially for something because of that annual. Anyway, again, we made a high. There was plenty of zones in here. Let me see. April 17th. Actually, we had, yeah, one on the 16th, one on the 17th, and then actually a little void into the 21st, excuse me. So, again, I call the voids a Scud missile, right? Or you blow up a balloon and let it go. The air swishes and the balloon travels any which direction, but with velocity. That's the tendency of voids. Now, there's not enough to really pinpoint, a market right now since we had quite a few zones. Anyway, again, I'm just proving this to you. I mean, I don't do this myself, right? I don't sit there and draw these in as like this as much because I can see them. I'm more of a integrated deal. Okay, we got an annual coming up. Oh, this one's on the 29th right here. This is the 29th annual. We have a zone coming up here. I'm thinking we're comfortable putting that in. The pressure ridge, again, the overall one, which we know is down. And this one tried, right? The bulls tried. It's still trying. We got the annual coming in. Hopefully everybody trades that and understands the annual. And it popped higher. So I'm comfortable now getting rid of these. And the bulls have saved the day. We're pushing higher right now. Again, it's still a pretty large percentage, right? But from this move, it's just hard to see. Okay, if I get too big, the arrows get so massive. I was trying to get that old high out of there. It's kind of skewing the chart a little bit. Okay, so here's our annual, and this is our zone. We are comfortable pushing that up since it took that area out, right? Not just because it was up, but it also took that area out. And then we have another zone coming up. It's an inside event. Again, accumulation of at least 4. May 7th, and this is May 8th. So we are unknown at that point. That popped higher, took out everything. So again, I'm comfortable. Now the pressure is really applied. The bears have lost control, right? And it's obvious, right? I don't know I don't have the volume on, but I guarantee it was big. This is a big day, important day, right? Downtrend line was violated. This previous swing was violated from this low, right? This is a confirmed swing low right here, right? Because of this push up this day. Now again, pop the stop. So you understand where the stops are. This is where the swing stops were from this low. If you had sold it in here and you didn't get stopped out, now more than likely you say, well, we better put stops in. They put stops here. Well, they took that out. Again, the market's mission is to always run stops. That's all it's bred for. It's designed for. As long as you understand that, right? Okay. Well, we had a next zone coming in, and it kind of petered out, which was a warning sign, right? This move, cleaning out everything and then running the stops, kind of similar to here, right? I mean, just doing some simple chart work from this low to this low. And from, again, it's similar in speed, similar, definitely in time, 9 days, from low to high. So your warning bells obviously were pretty pumped up here. If you're a bear in particular, you were waiting for some type of trap area where people are getting stopped out. Now, most people are bullish, right? But so now, of course, you can do that on the way down. This swing here could be replicated. This swing could be replicated, and that gives you a guide of where to trade it and look for a bottom if you're a picker in particular, where you want to get out. Okay, so we got this little zone, and we have our annual coming up. This market knocked out everything, and the fear of this being some type of a major cycle event is now confirmed, in my opinion. And the annual's the key ingredient now, which this is the 29th, so it's the actual date. Didn't fall on a weekend. So I'm not comfortable doing anything yet with that arrow until it makes a net. See there, it made a new low. Everybody was confirmed that, I'm in something I should have been out of. Okay, so we're in the month of June, right? Today is August 18th on a Tuesday. Today's kind of broke this video up a little bit because I had to do some errands, but 2026, so we'll get live here shortly. And you can see the market just gave up, right? Probably a lot of people bought this, it's hard to buy strength after a monster bull. I used to buy more strength, and I become more of a wuss. I tend to buy try to buy breaks. I mean, there's everything has its season. Definitely buying strength is okay when you're in a dead market and looking for a, a rounding bottom or something. Other than that, it's pretty tough to buy strength in this. Well, it's a percentage game, right? I mean, you buy it up here where you're risking down here. Well, Jesus, at 100 shares, that's almost 20 grand. I mean, come on. It's all about the risk reward. If it doesn't meet your risk reward, wait for a break. Now, again, trading these zones helps, right? Because you kind of know where maybe if we have an accumulation, you can maybe look at it. Now, we've got quite a few dates coming up, as you can see. The market rallied, gapped up, and then had some really weird small ranges. So again, I can't confirm anything. And we have another one. So we had big days. You look at the chart, the Excel spreadsheet, master chart, scoring a 9 calculator, and it was chock full. So a lot of stuff. These are all these 4 or more. So pretty big deal. This breaking down, making a new low. I think we're comfortable taking these off now, and it makes the pressure ridge pretty obvious. We had another zone coming up here, had a smasher day, and the 29th is coming up, right? This is 24th, this is the 25th, so we know the annular is coming in, which is important to me. Big, obviously I'm putting it on the chart for a reason, and now I can't really take anything off yet, but we understand the pressure ridge is down. The buyers do have some power, but it's muted to probably 6 days, 7 days, we'll call it. And this is I mean, if you're picking a bottom, this would be one I would be picking, right? Because I know probably where the risk goes, and we know that every time it pops these out, there's power behind this, right? This isn't a fluke. This isn't just one day. These are 4 days at least. So you're talking 12, 16 zones coming in at minimum with the annual. So it could be more, right? Okay, it's creeping higher. I am gonna probably assume that this market is just a Peter Piper picked a pickle peppers. It's just a dud, because that is unusual, right? I don't think that's indicative of a bottom. This is how it should trade in this heavy market zone, right? These spiky bottoms. Again, Newton's law comes into play. For every action is equal but opposite reaction. We had a spike high, we had a spike low. That makes sense. We had a spike high, we had a spike low. It makes sense, right? Now, we can see for every action is equal but opposite reaction. We're starting to turn to a softer market. Everybody's getting tired, heavy. They're sick of it. They're pissed off because, it shouldn't be down here. It should be at 200. Just how it is. It's the mentality of the market. I can't take any of these out, though, until we make a new low. We kind of proven the swing range, right? Well, I took it out, so I am comfortable getting rid of all this stuff. The bears still won out. It's just a dud. Again, what I call the money swing. Let me see if I can pull it up. Of course I can't. I can't pull up the volume once I took it off. I had the volume on there and I took it off. But I guarantee you that the volume on these 2 days right here, or actually 3, I call it the money bar. It's actually the money swing, probably with 3 days in event. I guarantee you this was a high volume stress area, right? So logically, even the risk is, if you're trading it risk wise, the stops are up here. And if you're a bear, you understand if you're wanting to sell more, this is where the stops are going to get hit, right? Because this is where a big volume was occurred, or here, right? Because again, the gap down occurred. No one could trade that. So somewhere in here is where the stops are, and until we take this out, you can't prove anything. And you can see heavy zones in here, right? These are 4 minimum. So again, just like here, we're getting a lot of data, and the market don't know what to do with it either, right? Now here's our next annual. Again, pretty key. Again, pressure. I can't really give you any clue. I assume if we take this out or take this out, that's where you start taking off the arrows. Okay, we proved then that, dang it, just quite ain't enough, right? Okay, now we can start taking we kind of understand the pressure is up. The bears are now under stress. And again, the annual was kind of the right shoulder of this head and shouldery kind of bottom. I'm going to leave those on for now. And we know then, right, that's like I said, if you're a bear, you'd have been trying to sell it up here if you wanted to add to your position. Or let's say you got out and you're looking at a place to sell it, because we know that this is where the stops are going to be. And the market knows that. And we are current. So I really can't do anything with this. Pretty interesting area. Again, this whole 3-day period is really the stress test for the market, and I look forward to seeing what that does. Now, we can say one thing for sure: the arrows, you can feel the pressure, right, has changed, and there's a lot of data, man. You're talking a lot of swings. I'm taking a 4 minimum. I'm looking through here real quick to see how many some of them these were. Oh, I don't see anything more than 4. August, let's go to August. Yeah, it looks like 4 kind of caps it. Now, again, I take everything that goes on the weekend into Friday. So some of these have a Friday squished in. So some of them, again, when I first was doing this, I thought, well, I got to change that. But that makes more sense. The weekends tend to gap. If you do have gaps, they usually occur on the weekend. So, okay, so that's where we're at currently on the deal. We are at an unknown area right here, but the trend, short-term trend is up. Obviously, the long-term trend is down. But there's a lot of dates in here. Now, again, some other things that obviously you can keep in track of as we took out this major trend and a non kind of the squaring of that range, not mathematical by any stretch, because I'm just going from, again, pointing it out. That's September 1. Of course, we have a holiday in there, so pretty key area on its own merits. So yeah, I'm kind of excited about this. Again, I've never traded SLV. I'm looking for those areas where I can maybe do some options. Again, maybe pick a little bit. Again, if I pick, I use options only. It's 100 shares, right? So it gives me some power. I can't really do anything here. I like buying puts personally on these kind of markets because the public is the public, right? Public is always a buyer. They're never a seller. The professionals that wait in the weeds, the thief in the night, the stalker, the wolf, right? The predator, right? The predators are always in the weeds waiting for that moment where they can pounce. This next annual will be pretty key. Let me see. We have 1, 2, 3, 4, 5. This was 6 months, right? This one was pretty key. This was a key one, and it was definitely the right shoulder, and again caused probably this pressure to change a little bit. Now I trade more data dates, right, than price. So again, for you traders, GAN folk in particular that like to trade price structure, that'll be pretty interesting down in here as well. I won't get into that, but something you can look into. Okay, I am going to sign off. Let me before I do, let me see when the next accumulation is. I'll just pull it over so you can see. Let me blow it up. We got 3 here, 3 here, 2 Friday, none, 1 on the weekend, nothing there, no 4 ones that I was looking at. We have a holiday in there. Let me see. Labor Day, I'm assuming, is the 7th. So again, everything will be pushed back, and that's a big one. The 7th Friday, that's a 5er. So again, we're added to the 4th actually. So this is how many will be coming in on the Friday. Obvious, holidays are there for a reason. Here's another one on the 9th. So actually, we have 4 on the 9th. We have 4 on the 10th, right? So again, these huge zones are big time pressure. I'm looking out into the future. I don't see as much. There's Tuesday's a big deal on the 22nd, 25th. Well, this weekend will be big, right? Because again, we have all that zones coming up. And I'm just glancing out, see if anything catches my eye. Kind of gets less and less as we go out. I'm just looking. Here's one Wednesday. So the pressure, really kind of is at the Labor Day weekend-ish to middle of September, and then it kind of slows down and then out to November, right? We have quite a few with zones out there. Again, you can print this out, pause it, write them down, whatever you want, or buy the program. You can, click this link. I do sell these. This is the square of the range calculator, which I have a few videos on. This is the master chart, the one I just did, and this is the online lessons, now called the master manual, if you are interested. Okay, that's it. I've kind of drugged it out a little longer than I wanted to, but it's pretty key, right? SLV. I don't.